Okay, hi guys, hi and welcome. We're shooting today a video on cryptocurrency and I'm here with Alex, and Alex has a really good understanding of cryptocurrency and what it entails. And would you like to explain why you have that good understanding, Alex? And
So first of all, I'm not a developer, so
Right.
if you're watching this, you're not a developer either,
they might be.
if you are, then, you should get involved in this space.
Yeah.
If you're working in another industry, you're working in the wrong industry, working blockchain. But, I'm not a developer, so for me it's been a little bit tricky at the outset to understand all this stuff. In fact, I had absolutely no clue when I started investing in this. I just thought I'd dip my foot in the water, try to see how it worked, So I remember the first time that, so just as a background, I used to run a recruiting business. I still do, but cryptocurrency has sucked up my life. And I find it vastly more interesting than what I used to do, so I focus on that now. I started basically buying bitcoins back in, I think, 2014, right?
Right.
And I'd read an article in Zero Hedge, and at the time, there'd been a Bitcoin bubble, right? So back in 2013, the bubble had burst, right? And the price of Bitcoin had gone all the way up to $1,000, and then it shot down all the way down to $200, right? And I remember Zero Hedge saying at the time, hey, this might be a good thing to buy, because right now the Chinese are trying to impose capital controls, and of course Chinese citizens are trying to evade it, and they're buying bitcoins to try to evade these capital controls, right?
Right.
So I bought Bitcoin, I think 10 Bitcoin at that time, for around about $200 a coin.
That's pretty good, given what they are.
But you know what?
Wow.
I was as silly as everyone else. I sat on it for a year or so. I sold it for 880 a coin, right, and 930 a coin, right. And then I didn't think any more about it. But at the time I was quite pleased because I'd made a big profit, right.
Yeah.
And I had I managed to get money out, because that was the thing, right?
Yeah.
I wasn't sure. I was buying this virtual currency,
Yeah.
and could I actually convert this into real money? Right?
Yeah. So let's stop you there. Let's
Yeah.
start with the basics then. So what is cryptocurrency, and what is it? A physical? Does it exist physically somewhere? Is there somewhere where we can trace it from? Is it an asset? What is it? Are we purchasing gold, or what is
Okay,
it?
so one of the things that we can say
Sounds
for sure
really ignorant,
with
sorry.
every cryptocurrency is that it's a piece of software, basically.
Okay,
right?
software.
So it's a piece of software, and it's a really cool, because it's actually very simple. It's actually very simple. I think anyone can understand how it works, right? But what you can do with it is amazing, right? So, the first cryptocurrency that was decentralized, right, was Bitcoin, right? So it was a cryptocurrency that was created by Satoshi Nakamoto. He wrote a white paper about it. This guy clearly was a cryptographer, right?
I hear about the white paper a lot. What is that like?
The white paper is basically an explanation of what Bitcoin is, and it's actually in the case of Bitcoin, it's fairly short. So I think that people can read that and get a better understanding of what Bitcoin is. But basically, it's peer-to-peer cash exchange, where we're trying to eliminate the third party. And the time at which Bitcoin was created was the time when we had the 2008 financial crisis, right?
Right.
And at that time, what we came to realize, all of us, is that the world was in far too much debt, right? There were far too many derivatives on that debt.
Mm-hmm.
There was far too much leverage, and that endangered the whole economy, right? So what had happened is that for years on end, the authorities in charge had basically allowed for the economy to become to get completely out of hand, right? So basically, back in the, actually this is quite interesting.
Okay.
You know, after the 1929 crash, there was a law that was put into place. I think it was the Glass-Steagall Act, right?
The
Glass-Steagall.
seagull.
You
Okay, cool. I don't know what that is, but all right.
And it restricted banks.
Okay.
It really restricted like what they could and couldn't do, because you know, if you don't restrict banks, like they're like a child in a playground. You know, they'll do crazy stuff, right? And they repel this thing in the 90s, right?
Right.
And then that's how 2008 happened, you know, because I mean, it's obvious that if you let banks like do whatever they want to try to make money, which is basically, you know, have reserves as small as possible. So, you know, you and me, we put our money in a bank account, say I put €1,000, you put €1,000, right?
Yeah.
The bank goes out and it lends 2 times that amount, right? Under the Glass-Steagall Act. But without the Glass-Steagall Act, it goes out and it lends 10 times that amount. So the price of real estate goes up and up and up, right? And then, you know, they lend to people who basically can't pay back the loans.
Right.
These guys default, and then the price of real estate go down, and then the banks have lent like huge amounts to people, and they can't recover their loans.
Yeah.
So the banks start going bust.
Yeah.
Right. And so the problem, if you like, with you and me trusting the bank with our money,
Okay.
is that we're trusting a third party that's fundamentally untrustworthy, right? You know, so we're relying
we can't
on that third
rely
party.
too much on them, yeah,
Right.
because there's been a lot of mistrust, and so you're saying cryptocurrency is a means of is a means of taking away that middleman and working peer to peer, so we can trust each other. And I heard last night, I don't know, I was doing a little bit of research on this, something about, they call it the trust factor related to Bitcoin. I don't know what it is anyway, but there's a trust factor or something or other related to having Bitcoin or trading in cryptocurrency, which exists within the trading system. And that's so why is it so important to why is cryptocurrency so important now? Why is it, you're basically saying it's because it's taken out the middleman, it's taken out the banking element of it?
I think it's basically an innovation that, in terms of importance, is on par with the internet.
Okay.
Right? That's why it's important. Right?
Okay.
And also, I don't really like to refer to cryptocurrency at large, because there's different cryptocurrencies and they all do different things. So they're kind of like computer programs.
So
it's like you say, when I say, like, for instance, like cryptocurrency, it would encompass Windows, it would encompass Google, it would encompass Linux, it would encompass Apple,
right,
and all of these things are completely different things, right?
When we see when we see cryptocurrency, we usually think about actual physical currency. So you're saying these things are not, it's not just currency, it's different. What? How would you term it, man?
Okay, so Bitcoin is like fairly straightforward, right? It's basically like peer-to-peer cash, right? But in fact, it's changed. So now it's not even peer-to-peer cash, because the cost of transactions of Bitcoin is now so high that you can't really use it for cash.
Okay.
So now they're saying Bitcoin is like a store of value, which, to be honest with you, I kind of disagree with, right? But, you know, it seems to work. You know, people are basically saying, okay, well, you know, we're going to stash some Bitcoin, you know, we're not going to exchange it, right? And we're going to use it as a store of value. You know, so far so good, why not? Okay. The thing is that there's 1,300 cryptocurrencies, and there's new ones that are created every day, right? And one of the most interesting new cryptocurrencies that was created is Ethereum.
Okay.
And Ethereum basically is smart contracts. So that's a bit of jargon, so what does it mean? Let's say that you take like a Coke machine, right? And you want to get yourself a Coke. So you put your coin in the Coke machine,
right,
and you press C5 and the Coke comes out.
Yeah.
Well, all of that can be programmed, so that I don't actually even have to go to the machine. The Coke can just come to me if I give it instructions such that, you know, I want a Coke, boom, delivery of the Coke, right?
Okay.
So that's what Ethereum enables us to do, is to kind of like agree on a contract, agree on certain terms between you and I, and then that agreement is placed on the blockchain and it cannot be changed. So you can do things like the land registry on the blockchain, you can pay your taxes on
There's
the blockchain.
There's a lot of words like blockchain we don't really know, but blockchain is, how would you describe blockchain as well? Because that's another good point.
Yeah, so again, that's fairly simple to understand, you know. It's basically like a chain of blocks, as the name indicates, right?
Okay.
So you've got like the first block is called the Genesis block, right? And in each one of those blocks, you're basically, in the case of Bitcoin, you're writing transactions, right? So you and I send some Bitcoin to each other, right?
Okay.
So the Bitcoin leaves my account, goes into your account, and that's written on that block. And that block is basically called a ledger, right?
Okay.
So what happens is that when that block is full, because it's only 2 megabytes in size, we need to create a new block, right?
Okay. Where is the block stored? Where is it?
It's stored on, because it's a decentralized network, I can download the entire blockchain on my computer, and you can do the same as well. So it's stored on computers all around the world.
Where does it start though? Where would the blockchain actually start?
With the Genesis block.
Okay, yeah. Oh, so it would start with the company itself, who's providing it, and then that would.
Well, you know, in the case of Bitcoin, like it started with like Satoshi Nakamoto programming the software, right? So it's a piece of software initially, so someone's got to program it. But what's really cool about it is that it's a piece of software that anyone can have on their computer.
Okay, cool. And this is the blockchain. And so the blockchain different cryptocurrencies, the different cryptocurrencies have blockchains.
Yeah, all of them have blockchains.
They have their own unique blockchain.
Yeah.
Okay, sorry, this sounds really ignorant, but it's...
Well, it's really complicated.
Yeah.
Like, until you kind of like get to wrap your head around it, you know, how this whole like...
it's challenging, man, yeah.
This area works, you know, it's all a bit puzzling.
So the blockchain is, so I think I'm getting like, so we've gone over this a couple of times, you know. So the blockchain basically is it's a network.
It's a network. Yeah,
it's the network. It's the inner network which the storage facility of the cryptocurrency. And so it's all okay. So it's
not. It's kind of really a storage facility.
No. So it's kind of so the way I'm seeing it, because I'm very visual. So I'm seeing actual blocks.
Yeah.
So what I see is like so the more blocks can be obviously created, right? More blocks are created.
Yeah.
Okay.
You have to have more block creations, because what happens is that, you know, when people are transacting together and everyone's doing it, you know, all these transactions need to go somewhere, so they go in a block, but eventually that block will be full, so you need to create a new block.
Right, okay, and so the blockchain is limitless? Or is there a limit?
It's limitless. It's limitless.
So that you can make billions of blockchains?
Exactly. Well, billions of blocks.
Billions of blocks.
Yeah.
Unlimited.
Yeah.
Okay, and so the blocks are data, the blocks are the cryptocurrency. So what the blocks make up what the cryptocurrency is. So the blocks are the money.
Mm-hmm.
Okay.
And it's really interesting actually, because you know that's the way that money worked initially.
Right.
So when the Sumerians started using money, what they would do is they were just like writing down on a clay tablet like the debt that someone owed to someone else. And that's exactly how so it was a ledger, it was a clay ledger. Right. So what we've done is we've taken like something really simple, the clay ledger, and we've put it in cyberspace and we've called it Bitcoin.
Okay, so this is just a ledger. So it's not.
It's
just So so you can't just take one of those blocks, like remove it so no one else can see the block, and then keep that block for yourself.
No, you can't do that.
It's shared. Everyone will see the blocks, but some people have access to one block or another.
Well, you don't really have access. Sorry to kind of like contradict you every time you say something.
Good, because I don't know, man. Like I'm learning from you.
But basically, like you can basically see every transaction on the ledger, right?
Okay.
So that's basically spawned off some anonymous coins, right?
Okay.
Because like people are basically a little bit, peed off about the idea that anyone can see how much is on a given Bitcoin account, right? So
So you could see it, so I could see how much you have theoretically.
if you knew my Bitcoin address, yes, you could. Yeah, absolutely.
Okay.
Yeah,
Okay.
yeah. So.
Why would they be peed off then? Pissed off because
Because like
Yeah.
like
I can't find
when
it.
I send you money from my bank account to your
Yeah.
bank account,
Oh, then I'll be
you,
able to see.
you don't get to know what my bank balance is.
Okay.
You know,
But now if you did that, I'd be able to
Yeah.
see theoretically.
I mean, until recently, people were very reluctant to even disclose how much money they made, like
Yeah.
what their salary was. You know, I mean, money is kind of like a bit of a taboo subject, right? So
Yeah.
people don't really
Yeah,
like,
like
you know.
discussing it because you
Yeah.
might get hounded and
Yeah,
whatever.
exactly. Yeah.
So-
yeah.
So you were saying that people got pissed off because they could see their ledger, so they started to create something else.
Yeah, so you've got like these
Yeah.
privacy coins. You've got like Monero, Pivx, Verge. You've got Ethereum is trying to include some privacy features in it, but Dash has got some privacy features.
So what makes
Zcash as well. Yeah.
what makes one like cryptocurrency more favorable than the other then? So it's because you were mentioning the other day.
It's all about how many people actually use it, really. You
And
know, and that's
also
what
you're
makes
mentioning the
Bitcoin so
company.
popular because Bitcoin ain't that great compared to other cryptocurrencies,
Right.
right? It's just not that fast. It's pretty primitive and whatnot. But what people really like about Bitcoin is that it is fully decentralized. It may be slow. It may be expensive to use, but no one's ever going to be able to take it away from you.
And it also has this mythicality, this
Yeah.
mythical figure who created it. So that kind of adds to the spice bit. And there's a lot of kind of TV kind of behind it.
Yeah,
news,
yeah.
and
There's a
so
lot of
that
media,
adds to it. And media adds
yeah,
to that.
yeah,
you know.
media attention.
But you were also adding, you were talking yesterday about another thing which helps prop up a currency is you were talking about a platform where you can see which different currencies there are, and then you can look at a particular currency and see the structure of the people who operate that, and that also adds validity. So you were talking about like the company structure, and like these guys are doing a good job, they have a good reputation, so that adds to your desirability to purchase that currency, right? That's what you had mentioned.
Yeah.
Is that not?
Yeah,
It's not a
yeah.
factor.
Normally, when I the thing is that, in theory,
Yeah.
a cryptocurrency shouldn't really have a management team. It should be a foundation. It should be like a bunch of people, because it's like Linux,
Okay.
right? It's open source,
Right.
right? So, and there shouldn't be a boss, right? There's no boss in Bitcoin.
Right.
Yeah.
But you were mentioning like a program the other day.
No, but it's very interesting what you're asking
Okay.
me about, because
Okay.
it just raises that thought in my mind. But a lot of new cryptocurrencies that have been launched have got management teams,
Right.
and if you're looking
That's-
to invest in a cryptocurrency,
ICO, right? The ICO.
Yeah, the
That's what
ICO,
you're
right.
talking about the
Yeah.
ICO, not the crypto.
yeah. So if you're looking to invest in a new cryptocurrency, then you definitely want competent people behind it, right? You want people who've got like substantial
yeah.
experience, that are reliable, trustworthy,
Mhm.
because you are totally at their mercy.
Yeah.
You don't have any kind of consumer protection when you invest in ICOs, right?
Okay, that's a good segue. So, cryptocurrencies, talked about different types. We'll maybe go into that later a little bit more. But ICOs, okay, so we mentioned ICOs
Mhm.
now, and you mentioned ICOs just a second.
Mm-hmm.
So, what is an ICO? And
It's an initial coin offering, and that again is like something that Ethereum has popularized. And basically, and this is part of what the cryptocurrency revolution is, and this is one of the things that I really like about it. It's basically, it's ICOs fundamentally are the privatization of money, right?
Okay.
So that's going to make private entities very rich, but it also offers you and me an opportunity to get in at the ground level, right?
Okay.
And hopefully make substantial profits, right? So it's fairly democratic in that respect. And, you can, with an initial coin offering, what happens is that someone's had an idea, right? They've had an idea and they've written it down on a white paper,
Mm-hmm.
and they've said, okay, so what we want to do is we want to create a startup that pursues that idea, right? Either that, or they already have a business and they want to create a cryptocurrency for that business.
Okay.
Right? And so that's why I say, you know, when we talk about cryptocurrencies at large, it's really difficult to define what it is because all these different things have got different purposes, right? So it's really exciting and interesting in so far as there's so many different ways that you can use these cryptocurrencies, right? So many different applications for them.
Isn't the end result of a cryptocurrency the actual monetary value? That's what I'm saying. Because like whether it's like an ICO, which is, I don't know, making like diapers, or like an ICO which is trying to fund like a music festival, you know, whatever.
There's actually
it's called.
There's one called Aventus.
What is it called?
Aventus, yeah.
Aventus, check it out, guys.
Yeah. Well, don't invest in that.
No?
No. Okay. But some people
maybe it's a good idea. It sounds like a really genuine
No, when
idea.
they had their ICO, they made a lot of people maybe like a 500% return or so, right? Who invested in it originally.
Oh,
That's only because there was a pump at the outset, right? I just don't think that just generally speaking, right? I think that we should mention Polychain Capital.
Let me just finish the question.
Yeah,
So no matter what those ICOs are, they all at the end of the day represent a currency of sorts. Is that right? So every ICO represents currency. So whatever the cryptocurrency, it always comes back to being a currency and like the value of that currency, right?
And the novelty here is that before, when companies wanted to raise money, they could either issue debt or they could issue equity, right?
Okay.
But now they can issue currency.
Okay.
So that's like a third.
It's really cool. So that's like a really cool thing to do. It's a third way for like a business investment.
Yeah.
So is this quite
for a business to actually raise money.
Raise money.
Yeah.
So is this? Yeah, that's really good. So is this commonly used? Is it like quite commonly used? Do you know, or is it like kind of a new fad?
Well,
like
there's been $4 billion worth of ICOs this year, and next year it's expected that there'll be $10 billion.
Right.
And I think that this thing is just going to grow and grow and grow and grow because equities is 633 trillion, I think, right? So just imagine how much like currency could be, like this private currency. It could be like massive, you know. And this is the deal. Okay, so if you've got a choice between like infinite currencies, right? Which one should you pick? Should I tell you?
Yeah, go on, man.
So this guy, Olaf Carlson-Wee, he used to work at Coinbase. He was like the first employee at Coinbase, right? Which is like, we'll have to talk about safe storage of cryptocurrency later on, right?
Yeah.
But he was like one of the first employees. He had a degree in sociology, right? And he just like wrote his thesis on blockchain, and absolutely like passionate about it. And so he went to work for Coinbase. And then after a while, he realized, do you know what? I can just start my own hedge fund. So he goes out, he starts his own hedge fund, and he starts telling the world, this is what I'm going to do. I'm going to invest in blockchains. And, okay, but everything is a blockchain, so what do you mean exactly? No, what I'm going to do is I'm going to invest in blockchains that offer the possibility for other companies to do ICOs on them, right?
Oh, right.
And why? Because he says this, it's like investing in the infrastructure of the internet. Imagine if someone had sold you like TCP/IP, right, and you owned a portion of that, and every website that was created, right, basically you got like some kind of like revenue from that.
Yeah, TCP/IP is a really integral part of the internet.
Yeah. So he's basically saying, look, what I'm trying to do is just focus exclusively on investing in the infrastructure of cryptocurrencies. And I think that I'm going to make money that way. So
it's a good call.
It is, yeah. So Ethereum, for instance, is like something that he invested in at the outset. And Ethereum, they raised $17 million at the outset, right? Well, today the market cap is in excess of $50 billion, right? So people who invested in Ethereum back in 2014. They've had like last year.
Wait, is Ethereum an ICO?
Ethereum ICO'd, yeah. Initially they ICO'd.
ICO. What was it?
Well, basically it was this guy who was like a dropout from like Waterloo University,
Yeah.
who worked for a Vitalik Buterin, his name is, right? And he worked for a magazine that covered cryptocurrencies for a while. He was studying computer science at Waterloo. He dropped out because he had this idea that you could, you know, use this same concept as Bitcoin, right, the blockchain, but you could use it for people to contract between each other, right?
Okay.
So instead of like using it just as like a way to kind of like exchange money between you and me, we could just like write a contract in there, right?
Okay.
And then, you know, that contract would basically be immutable, right? Because it's basically like, this is the neat thing about blockchain is that when you put something in it, it's there forever. You can't change it, right?
Mm.
And so he basically wrote a white paper again. You know, people thought, oh well, actually, yeah, this is quite neat. This is a great idea. So we'll put money in it, right? And it worked. It worked
Cool.
like amazingly well. Yeah.
So was he the founder of the contract?
He was the founder of Ethereum. Yeah.
Yeah. Okay.
And
The
do
contract system.
you know what else? He thought that Ethereum's price got out of hand at $7, so he sold most of his Ethereum at $7. Yeah, and now it's trading at like yesterday or I think today it was trading at $660. Ethereum is trading at.
But doesn't he get a percentage of?
He's got a bit of Ethereum left, you know.
No, but wait, doesn't he get a percentage of the whole?
No,
Like,
no. He sold his Ethereum.
wow, you're joking. Does he have enough? Does he have? He must be. Is he rich?
Oh god, yeah, he's very rich.
Also,
Yeah,
like,
yeah. We're not going to
Wow.
pity like poor Vitalik for like you know,
okay, so
not having enough
okay,
money.
so okay, so okay, we kind of went over that. What makes like one, for instance, Bitcoin so much more expensive than the other? We didn't really actually discuss that because Bitcoin is quite popular at the moment. So why is it so like big right now? Just because
Okay,
of the
so
name?
let me give you one reason that most people don't know about. The G20 decided to make it legal for banks to help themselves in their customers' bank account. So we saw that when Cyprus went down, right?
Yeah.
But most people do not know that if they have money in a bank account, the bank legally is entitled to seize your deposits if it gets itself in trouble,
Okay.
right? So the bank
So hence Bitcoin came out of this and said, no, we're not doing it. We're gonna make some.
Well, this thing became legal back in 2014.
Okay.
So Bitcoin had already been like
Going.
in existence for 5 years, right?
Right.
And I think that these days, like, what makes Bitcoin popular is not so much this, but the fact that it goes up in value all the time, right?
Why though?
Because it's limited in supply, right?
Okay. And with the other one, so with Ethereum, it's not limited, is it?
No, Ethereum has got like a 5% inflation rate, but I think that it's going to reduce over time. So they've already reduced the inflation rate, and they're going to continue reducing it.
So it doesn't have a limit.
And to be honest with you, I much prefer Ethereum as a currency because it's got utility, right? Whereas Bitcoin doesn't really
What
have.
type of utility does?
Well, it enables any entrepreneur to
Okay,
come up
yeah,
with
yeah.
a business idea and launch on the,
Yeah, okay.
the
And Bitcoin
Ethereum
has
blockchain.
none?
No, it doesn't have. It
It's
basically,
just value.
yeah, it's like Bitcoin's main app is storage of value. So if you like, what Bitcoin is like a massive bank account. That's
Okay.
what it is, right? Everyone basically puts their money in that bank account,
Yeah.
and because everyone puts their money in that bank account,
It
and there's a
becomes more
limited
valuable.
supply of
Space.
Bitcoins,
Yeah.
right? The price of Bitcoin rises and rises and rises.
Can I use this? I don't want, you don't have to go into too much detail. I know it's a little bit odd, but Bitcoin. What is actually Bitcoin? What are they actually trading? What is the physical thing that they're trading?
Bitcoins.
Yeah, but what are they? What are they? What is a Bitcoin? It's a difficult. Oh, so okay. So cryptocurrency. We've gone
Do
into.
you know, I'll try to answer that. Bitcoin is basically like a private key. So your private key gives you access to an account where you have a Bitcoin balance.
Okay.
If you got hold of my private key, you could steal my funds,
Okay.
which is a segue into like the safety aspect.
Yeah,
right?
yeah. We could do that. Yeah. So it's yeah. So with the safety angle of it, how do you then? Because there is a lot of safety issues around cryptocurrency. It seems a little. Well, with banking, you have a middleman. You have the banker, and he's got the bank account, you've got the lock, and you've got blah blah blah. But with Bitcoin, a lot of people, or cryptocurrency, a lot of people struggle to kind of invest. There's the risk factor, a risk factor of like, oh, will this go up or down? I don't know much about it. And then there's also the safety angle, you know, that people maybe not, you know, say out loud, but it's kind of unstated, and it's that you know, you could get hacked, or you could, and there's no one taking care of it, so it's just you to another person, give me some money and blah blah blah. So there's that
You're
angle.
your own bank.
Yeah,
So
yeah.
you're responsible
Yeah. So
for all the security that a bank would normally provide.
yeah. So
Right.
how do you keep it safe then? What do you do? Is it safe to purchase cryptocurrency?
Okay, so basically, there's a couple of rules that you need to follow. The first thing is, don't leave your money on an exchange, because there's been several exchanges that have been hacked. Why? Because like they're the place where all the currency gathers, and therefore, you know, for hackers, that's like the one place that they can go to and steal the coins, right? So, you know, Mt. Gox back in 2013 got hacked.
Mhm.
You know, they lost like a huge amount of bitcoins, and that caused a crash in the price of Bitcoin, right? So people who had their bitcoins on the Mt. Gox exchange basically lost their Bitcoin, right? Bitfinex got hacked, right? And everyone had to take a 36% haircut on their funds, even if they weren't invested in cryptocurrencies, right? So,
Shit. So it affected the actual company.
well, it affected all the people who were trading on that exchange. You know, I mean, that's really annoying. You
Wow,
know?
that's annoying. Yeah.
Yeah. So that happened. Then, you know, there's been other like notable hacks. Like for instance, like there's this Ether Delta thing, right? Which is like a multi-sig wallet. So that means that if you and I start a company, instead of me just having the wallet and you trusting me, what we're doing is we're basically creating a wallet for you and me,
Mm-hmm.
and for you to take funds out, I have to sign off on it. Otherwise, you can't take the funds out, right?
Jesus. All right.
So the parity wallet. Did I say Ether Delta? No, God, no, it's the parity wallet. That's the parity wallet basically got hacked, and $300 million of funds were lost. So now Ethereum has got to do like a hard fork in order to kind of like recover those funds.
Right.
So, yeah, you know, that's because it has to do a hard fork, because like when something happens on the blockchain, it's immutable. And actually, this is an interesting topic, because in the early days of Bitcoin, there was like a hack on Bitcoin as well. And I think that hackers stole like a ridiculous amount of coins,
Okay.
and Bitcoin had to fork in order to make those coins unavailable, right?
Right. They had to what? Sorry.
They had to fork
Fork.
the network. Basically, what
What's that?
happens is,
Sorry, man.
like, you've got this chain of blocks, right?
Right.
Okay. A fork is basically, we say,
Oh, you put the stop in it.
no, we're saying that we're going to go in this direction, right?
Yeah.
So it's like a fork, like exactly like
Yeah,
a
yeah.
fork, right?
So
So
like
where you had like a single thing going on,
Yeah.
now you've got two things going on, right?
Ah, right. Okay.
So you're creating a diversion
Right.
on the blockchains, right?
Okay. So to avoid.
Yeah, and so we've had a couple of forks on Bitcoin of late because people don't agree on the direction of Bitcoin. So
okay.
we've had Bitcoin Cash, which basically Bitcoin Cash, they said, you know what, you know, Bitcoin Core, you guys have got it all wrong, right?
Okay.
Because they're saying like you want to keep the blocks to 2 megabytes in size so that
Yeah.
anyone can download this on their computer, right? In the original Bitcoin white paper, it said that if we wanted to scale Bitcoin, so if we wanted to make it available for more people to trade on the Bitcoin
Right.
network, all we had to do was increase the block size. So Bitcoin Cash is basically saying, we're going to have a new blockchain that uses 8 megabyte blocks instead of 2 megabyte blocks. And Bitcoin Core is
That was
saying,
the original idea, was to do
Yeah.
that. When you wanted to scale up the size of, they wanted to increase the block.
yeah,
And so that's what these guys are doing. Okay.
yeah, and Bitcoin Core is saying, okay, well that's all well and good, but here's the problem you're going to have. Eventually, the blockchain size is going to be so big that anyone who tries to download it on their computer, they're not going to have enough space on their drive to download the whole thing.
Oh,
And
shit.
therefore,
true.
The only people who are going to be able to download the blockchain on their computer are going to be people who've got like big computers.
So I kind of mentioned this before, the cloud system, the cloud sharing.
Yeah.
Instead, so they can put it on a cloud. Is that possible as well? Maybe move
Yeah,
it
but
from,
who owns the cloud?
yeah.
Amazon. So what
No,
if
it doesn't have to be Amazon. It could
No,
be,
but what I'm saying is like decentralization is about avoiding any single point of failure, right?
Ah, right, yeah, because then you've got that angle, so you can't decentralize.
Yeah.
Ah, I see. But then you could use it as like, it's a network, because using the internet already, so it's like an intermediary. So it could be like cloud sharing is kind of, yeah, you're right. Well, maybe, anyway, a move forward in the internet, maybe they may move towards more of a cloud sharing system as well, which wouldn't be run by one particular person, but will be
That's actually a really interesting idea because that's really what Ethereum is as well.
yeah.
That's really what Ethereum is, right?
Nice.
So it's like one of the things they tried to sell when they talked about Ethereum, they said that it would be like a supercomputer, but a decentralized supercomputer.
Hmm.
You know.
It's very difficult to make that possible, though, isn't it?
Yeah, it's so interesting, like how basically this blockchain area is like it's like a honeypot for creativity, right?
Right.
You know, I just mentioned to you that there was 4 billion worth of ICOs that happened this year. Well, you know, that's basically exceeding the amount that venture capitalists normally would give out to businesses. So it's enabling, you know, a lot more businesses to be created. There's a problem with that because a lot of this is utter crap, right? You know, probably at the end of the day, 99% of those currencies will probably end up being worthless, right? I think that there was a guy who was involved in like the creation of Bitcoin initially, and he was saying if I'd have known, you know, that this would happen, I would have never done it, you know, because there's maybe like already 1,500 currencies that are dead, you know, that have been dead and buried. And what happens is like one of the issues that we talked about with these ICOs is that people can go out and say, hey, give me $10 million. We give them $10 million, and then they've got no incentive to continue like with the project. You know, so
it's a challenge.
yeah.
Okay, so another thing that you had kind of mentioned earlier as well. Let me see where it is so venture capitalists in relation to this. So where do venture capitalists come into making this work? The cryptocurrencies. You've got these rogue groups of people who just come in and fund. So how do everyday like you and me or whoever, you know, come in and kind of become a part of it? Is it kind of just being taken over by these large groups of people with lots of money, or
No, it's the opposite.
Okay.
It's the opposite. Basically, like these ICOs are making like venture capitalists redundant, really. You know, I don't know that redundancies have actually started, but you know, sooner or later that's going to happen because we don't need them anymore. You know, or they have to kind of like reinvent themselves. So that's already happening. Like you can actually buy cryptocurrencies that invest in ICOs. And that's really neat.
That's cool.
That's really neat because that saves you all the headache of doing the analysis yourself, right?
Yeah.
And to be honest with you, like if you're immersed in this space, it's really not that difficult to actually tell the stuff that's actually going to work out pretty well.
So
right?
is it that hard, really, man? Sorry to interrupt you. Is it that hard to actually get involved in cryptocurrency?
No, it's
Somebody
like
who's
publicly available information for anyone who wants to get involved in it. You know, and you can get involved in different ways. You know, you can get involved by buying some, you know, or you could get involved by trying to set up your own business and see if someone will fund it. You know.
Yeah, there is that as well. Yeah. So this is maybe it's a bit of a strange one, but the idea of cryptocurrency. Okay. It's the one of the main words there is crypto. Yeah. So why does I know you don't like this question, but what?
The technicality aspect of things. Oh, good lord! All right.
So what does the crypto represent in regards to the currency?
Right. So Bitcoin is basically like proof of work, right? So proof of work means that we need a third party to validate transactions, and that third party is miners, right? So a miner is someone who has like a, God, I'm going to be technical, who's got like a GPU, right, or an ASIC
Cool.
piece of like mining equipment. So it used to be the case that like if you were really into gaming, right, you needed like these video cards that enabled you to kind of like
really powerful video cards.
Yeah, exactly, right? Well, now gamers are really pissed off because they can't get hold of this stuff anymore because there's all these miners out there that are trying to kind of like use those cards, right, to kind of like figure out the solution to a cryptographic problem. So that's actually how new blocks are formed. For a new block to be formed, basically, we're trying to create an incentive system, right? So we're trying to kind of like make sure that someone has got an incentive to what's called mine that block, mine it, right?
Okay.
And the incentive is you get some Bitcoin if it's on the Bitcoin network.
Okay,
right?
so it's kind of like a game. If you play the game, you mine it and you break the code.
And mining is a very profitable game to play because it costs about $1,000 to mine a Bitcoin, right? And the price of Bitcoin now is $17,000.
Does every cryptocurrency have a cryptographic puzzle?
So that's another angle that you could get involved with cryptocurrencies, which I didn't think of, which is mining, you know?
Yeah.
But the problem with mining is that these days it's very centralized. Like you got like people who have like huge like warehouses, you know, with like mining equipment.
Yeah, that's quite, I've considered that, but like, then I realized the equipment.
And you know what, like in Siberia or in like other places, they've stopped using like the central heating. They get like mining equipment because that stuff is like, it heats up so much.
It's like gold mining, it's like panning for gold.
Yeah. That stuff heats up so much that it's actually, you can use it to kind of like heat up your house, right?
Wow, what, the systems, the computer systems, you mean?
The actual GPUs.
Okay, right.
Yeah.
Wow.
Yeah.
The computer.
Yeah. And you know what? In Russia, you can't get hold of this because Sberbank has decided to buy the entire supply.
Burbank, California.
Sberbank. It's like a Russian bank, right? They've decided to buy the entire supply of graphic cards that was available in Russia to mine. Yeah.
Wow.
Yeah.
Okay, so they'd have a group of people, a group of computers centered around. It's just Bitcoin, is it?
No, when people mine, I think that they try to mine like, you know, a bunch of different cryptos. Like there's
all of them are mineable, or?
Yeah, and it's a real problem as well in terms of like electricity consumption. So what's happening now is that some cryptocurrencies are basically saying, you know what, we're going to stop this proof of work business and we're going to switch over to proof of stake. And that's really interesting because proof of stake is like another way to kind of like make sure that people have got an incentive to validate transactions.
Could you explain truth of stake?
Proof of stake.
Yeah.
So basically, I own like Ethereum tokens, and I'm basically saying I'm going to not touch those Ethereum tokens, and I'm going to stake them, right, to validate transactions.
Oh right, so it's like an asset, having an asset.
So if I have like $100,000 worth of Ethereum tokens, right, I'm basically saying
you put some on hold and.
Yeah, I'm basically making my capital available to validate transactions, and in exchange, I will get some Ethereum tokens, so I'll get a return on my investment. Right.
Okay, just because you
staking. Yeah, because you're staking. Yeah.
Wow. Okay, so it's like investing in a bank. Then you get
dividends. Yeah.
Oh right, cool, man. Interesting. All right. I don't know what. Okay. Security. Let's do security. Yeah.
Okay, so basically, for anyone who's got like less than €1,000 worth,
we've discussed it like briefly with the hacking. So and now it's the cold storage and the hot storage.
Yeah, that's right. Yeah, you're becoming well versed with this stuff, right? So for anyone who's got let's say less than €1,000 worth of crypto, right? You can open an account with Coinbase. And you can put your cryptocurrency in the Coinbase vault.
Okay.
and that is very, very secure, right? Do you want me to discuss the ins and outs of that, or?
Yeah.
Or actually, you know, like I said, I've written an article about this.
Okay, post it.
Yeah,
Paste it below.
yeah,
And they can check it out.
you'll post it below, and people
Yeah.
can go more into this because
So the
otherwise it's too
article's
boring.
on-
Yeah.
No, sorry. The
No,
article is on.
The article is on like safely buying and storing cryptocurrency.
Cool. We'll link
Yeah.
that below, man.
And the other thing that we should say is that the other thing that you can do is like put it on a cold storage device, right? And the safest cold storage device there is the Ledger Nano S.
Okay. Legend NOS.
Ledger Nano S, yeah. And if people want to buy a Ledger Nano S, they should do it through the link that's under the video.
Nice.
Yeah.
Yeah.
So that you get paid a referral fee because you don't get much money from making YouTube videos, right? So
Yeah.
might as well like.
Well, it's to help people, and it's just something
Yeah.
passionate to do.
But I mean the other thing, the reason
But yeah.
to actually buy a Ledger Nano S is because like first of all it's very old, so it's been around for some time, so it's proven, right? And the main competitor Trezor was using like semiconductor or equipment that was unsafe. So if someone actually got hold of your Trezor, they might be able to get your cryptocurrency from it, right? Whereas nothing like that has happened with Ledger
Okay.
as of yet. And I think that if it was possible to do something like that with the Ledger, someone would have done it, right?
Okay. So it's extremely safe. It's like an extremely.
Yeah, I mean the main issue that you've got really is if you forget your code. Like if you forget your code, or if you lose like your safety
It seems
phrase.
it seems to be a factor, man, because I'm using like a lot of these different systems, like Steemit, for instance, and over there as well. It's the password. Remember the password. And if you don't have the password, that's it.
Yeah.
So like a password is it's quite a big factor. But so there's a lot of the safety angle which is played in there.
Yeah.
They're highly aware of this and the hacking and it seems to be quite a thing.
I mean, another thing that we should mention about safety is be very careful, like where you send your crypto, right? Because if you send Bitcoin to the Ethereum network, you lose your Bitcoin. That's it.
Right.
End of. Right?
Really?
Yeah. There's no like replay protection.
Say that again.
basically.
Then say that again. Alex.
So if you send your Bitcoin to the Ethereum network, because Ethereum is a completely different blockchain,
oh right. So you lose the Bitcoin.
you lose the Bitcoin.
Wow, because of the difference. In
And
the
here's
blockchain.
what's even worse than that, right? And this is happening a lot now. There's loads of like Bitcoin forks that are going on, right?
Right.
Because people have basically found a way to make more money out of Bitcoin, which is forking the network,
Wait,
right?
Put a fork.
Yeah. So if I send Bitcoin from Bitcoin to Bitcoin Cash, gone. You lost it. If I send Bitcoin
Really?
Cash, to Bitcoin, gone. Lost it. Goodbye. Nothing you can do to recover it.
Wow, that's so shit.
Yeah.
Wow. So is it? And people do that quite often, I imagine.
I did it once.
Okay, this is where it's coming from. Really?
No, I did it once, but I got lucky. I
With
got
a whole
lucky.
Bitcoin?
Well, I was talking to like someone, and I was doing this, and I was half asleep, right? And I sent like some tokens from the Ethereum network. I sent them to the wrong wallet, right?
No.
I sent them. I think there was like this Monaco coin, and there was like another one that was like similar. And I sent it to like this other one, and then I was like, oh my God, what have I done? Right? Well, thank God, right? I sent it to an exchange, and because it's on the Ethereum network, I actually managed to get the tokens back.
Okay,
right?
wow.
Because Monaco is basically like an ERC20 token that is part of the Ethereum network.
Okay.
But if it wasn't part of the Ethereum network, if I'd have sent those tokens to like the Bitcoin network, that's it, it would have gone forever.
Wow, man. Oh, okay, cool.
Yeah.
So all in all, basically, let's just see if we've got anything else here. Maybe we can cover validation, margin of safety.
Actually, that's it. I would like to do margin of safety. Right?
Let's do it, man.
So let's talk about Warren Buffett.
Okay,
He's like the world's greatest investor, right? And Warren Buffett became the world's greatest investor by applying a concept that he learned from a guy called Benjamin Graham. And this guy, Benjamin Graham, he wrote like the textbook on investing back in 1934. And the book is called Security Analysis. And it's a wonderful book. I read all 5 editions of this thing. And they're like 700 pages long, right? You know, he talks about what it was like back then, what the stock market was like. And I kid you not, it's exactly the same as the cryptocurrency markets. Like the cryptocurrency markets are basically, right now, they're the Wild West, right?
Mm.
And back then, like the stock market was also the Wild West, right?
Mm.
So you had to be so careful about how you invested your money, otherwise you could easily lose it, right?
Yeah.
And so one of the principles that Ben Graham talks about is this margin of safety principle. And for him, like what he was trying to do when he was investing in something was to buy it cheap enough that if the price went down, right, he knew that the value that he had
Mm-hmm.
in equities was good enough that it was basically like he bought like maybe the equity of the company at 70% of the actual value of the company.
Okay.
So
wow.
he had this 30% cushion
Yeah.
that if anything happened, he knew that he actually owned something that, you know, he hadn't paid too much money for. And, you know, if we're trying to translate this concept of margin of safety, and there's another thing that Ben Graham mentioned that was, I think, really, really important. He said the number one rule of investing is never lose money, never lose your principal, right?
Mm.
The number 2 rule of investing is never forget rule 1, right?
Yeah, yeah.
So with cryptocurrencies, you get pump and dumps, right? And what happens is like from a
Pump
psychological...
and dump, so you
Pump
pump
and
it
dump.
up and then
Yeah.
dump the...
So basically, so you get a group of investors that get together, they try to pump the price up,
Yeah.
right? And then they dump it on unsuspecting
okay.
investors at the top,
Okay.
and then the price just like falls down because there's no demand for it anymore.
Wow, and so they get their money, get out, and then leave it.
That's right. So they basically like, you know, take advantage of other people.
Okay, do they ever create ISOs and then do this?
ICOs and do this.
Yeah,
Yeah,
of course
yeah,
they do,
yeah. I actually met a guy at a...
There's no regulation to take care of that? Like
No,
how people do that?
it's totally unregulated.
Okay, because they do that in Wall Street a lot, and it's what is it?
Well, you know, if they did that on Wall Street, they'd get arrested.
Yeah, that's the thing.
And
Yeah,
thrown
they'd
in
get
jail,
arrested.
right.
Yeah, so
Yeah.
there's none of that.
And this is why it's the Wild West
That's
cryptocurrency
quite
market.
sad, isn't it?
Yeah.
Yeah, let's not encourage that, please.
No, but I don't think that people would do this. You know, I mean, you have to kind of like be pretty organised and whatnot.
Yeah, they might be organised. Yeah.
And they're cracking down. The exchanges are cracking down on this now.
Yeah.
So because the exchanges could get shut down if they allow this kind of practice to occur on the exchange. So
Okay. Wow. What do you
I
mean? Do they ever? Wait, does cryptocurrency exist on the stock exchange as well?
no, well, now it's starting to with the introduction of futures contracts. But
Okay.
you have to be really rich to be able to trade like a futures contract.
Okay.
So you know they exist on exchanges, but they're like specific cryptocurrency exchanges, right?
Okay. So
And-
so it's not Bitcoin's not going to go to the main like stock exchange Wall Street. It's not gonna- may do eventually.
Well,
That may be where
Bitcoin
it'll
has actually
trade.
just gone on to the CME,
Okay.
which is like the futures, or no, it's not the CME. That's the Chicago Metals Exchange Board. It's the CBOE or something like that. Well, it's like a big exchange in Chicago. It's also going to be on the Nasdaq. You know, basically like any exchanges where you can trade futures, right?
Yeah.
Bitcoin is going to be there.
Okay. Another thing I was thinking of actually, and this is quite an important one. So, the idea of cryptocurrency being like a revolutionary concept, which is changing the way we.
Do you know what we were talking about investing, yeah, and I didn't quite get to finish like what I was thinking
To it,
about.
and then I'm going to go
Right,
back to that
okay,
one.
yeah.
All right, go.
So
Sorry.
basically, so in cryptocurrencies, like what you're trying to do is like buy something that at a low price
Yeah.
and sell it at a higher price.
Right.
So the margin of safety concept,
Yeah.
basically you should buy maybe like when there's like a dip.
Mm-hmm.
Like so
Yeah.
far,
As with most.
yeah. So the dips with Bitcoin, they can be anything from like 30 to 50%.
Right.
So that's
So that would be a
that would
significant
be
dip.
technically that would be like buying low. But the other thing that you need to look at is where are we in the market cycle, right?
Mm.
Because right now, like the market cycle looks like it's tough to figure out where we're at in the market cycle because the market cap is $450 billion or something like that, right? Close to 500, close to $500 billion.
Right.
So we got to ask, like, how far can this go? And people are predicting that by the end of 2018, the market cap will be 2 trillion.
Jesus.
Maybe the market cap people are saying that it can go up to 5 trillion. I think it can go higher than that, you know. But it's going to have to get a heck of a lot better.
Wait, sorry. The
total market cap
of cryptocurrency.
Yeah,
or
cryptocurrency as a whole. Yeah.
So
yeah.
who creates that market cap? Who's the
It's
one?
all the different cryptocurrencies that exist on
Okay,
the
so
market.
it's the end result they see foreseeable in the future. They cap it at that. So cryptocurrencies themselves create that cap value, or who creates the cap?
The value of, basically the market cap is the aggregated value of all the cryptocurrencies.
Right. Okay.
So Bitcoin has got like.
I've got it. Oh, sorry.
Yeah, you get it. Yeah. All right. Cool.
Getting it.
Yeah. All right.
Yeah, but you maybe explain it again, so maybe someone else does.
No, but look, it's a straightforward concept. Like, we don't need to go too much into detail on that. But basically, like, you know, what we need to try to figure out is how do we buy low and sell high, right?
Yeah.
I think right now you could buy. Well, I was going to say you could buy any cryptocurrency, but then some of them might go down to value to zero, right? So let's say you buy like a cryptocurrency that is popular, that you know has got some kind of like maybe advantage over other cryptocurrencies, right?
Yeah.
You could buy that right now, and that would be buying low because we're in the early stages of adoption of cryptocurrencies.
Okay.
So a lot of people are like massively bullish on crypto.
It's all relatively low at the moment because it's the
one of
beginning
the reasons why their prices are going
Yeah.
crazy and they're going up so much is because like people are speculating that this thing is going to be so big
Yeah.
that there's like massive growth potential still left in it, right?
Right.
So technically, like we could be buying low, but you know the prices have moved up so quickly, so fast that we could be buying high as well. So you see how difficult it is to figure out
To
whether you're buying low or whether you're buying high.
Yeah.
Because a lot of like old school guys are saying, you know, massively dangerous investing in cryptocurrencies. It's a bubble.
But they said
it's
this.
gonna
Yeah, they said the
burst.
same thing about the internet. I think it's kind of similar to the internet, whereas a lot of people are just doing very well because it's a really.
It's got no intrinsic value.
No, but it's a really,
No.
it's a highly profitable like kind of asset. It's like a very good thing to have. It's just doing well. It's the move forward. It's the next stage in the way we trade. And the next stage in which we organise things. It's similar to the CD versus the tape recorder. I think it's just a movement, and people, oh fuck, I love the tape recorder. I need the tape recorder back.
To go back to what Benjamin Graham was saying, right?
It's all
Basically,
becoming
like
digital.
the advantage of investing in a company is that it can be valued. The disadvantage of investing in a currency is that it's very hard to value. But having said that, the big advantage of investing in a currency is that it's almost unlimited in scope how big it can get, whereas a company is limited, right? So that's a really exciting thing, right?
Yeah, it's pretty good.
The fact that you could like buy something like I did with Bitcoin, I could have bought like, and if I'd have held on to my Bitcoin, now it would be worth, I spent £2,500, it would be worth, or actually I spent $2,500 and now it would be worth $170,000.
How many did you buy at the time?
10.
Ah,
In just 3 years, can you imagine?
wow, it's very good. Very good. So so that brings us to the next question, the one we were talking about before. So the revolution of cryptocurrency and where it's moving forward. What I was saying there is that everything's becoming digital. Everything's gradually becoming digital. Tapes became digital, MP3s, and then
So another thing that's
moved digital.
interesting.
Films become digital.
Yeah.
Now currency is obviously the way forward, is it, for it to become digital. So
Yeah.
so how do you see it as like a revolution in the chain? Is it a revolution, cryptocurrency? What is it that's happening? Is it like a revolution? Is there a community revolution where people trade between each other and it takes out the middleman? Is it a revolution in the system? Revolution in like everything?
That's
Do
a
you
good
see that?
question. First, like to answer your question,
Yeah.
I need to kind of like explain what money is first of all. So
Yeah,
shall I
do that. Go, do that. Yeah.
So for anyone who's like interested in this topic, there's a documentary which is absolutely brilliant called The Money Masters. So you can find it on YouTube. You should definitely watch it
Yeah.
because it's shocking. It is shocking, right? This is the deal, right? Hang on. Right. So I got this, €50 note, right?
Okay. Yeah, we needed to explain this. It's a good point.
Yeah. So I got this €50 note, right?
Yeah.
What is it, right? It's a piece of paper with 50 written on it,
Right.
right? So what's the difference between this piece of toilet paper
Right.
and this?
Right.
I mean, they're both paper.
Monetary value, yeah.
What if I write like 50 on this piece of toilet paper?
Right. So this links to something. So there's a value associated with this. There is a product or some type of value which created the wealth of this initially.
Is that?
Well, that's initially what was there. You was mentioning before that it was. Go on, you explain it yourself. It was gold.
What gives, like basically if you and I transact with each other, right? I'm giving you like a good
Yeah.
and you're giving me money for that good. What if you basically were in a position to create as much money as you wanted so that you could buy as many goods as you wanted?
Which is happening, yeah.
Well, that would be a problem, wouldn't it?
Yeah.
So generally speaking, what human beings have preferred to do has been to transact with things that were finite in supply,
Right.
like gold.
So it was originally pegged to the gold, the coinage.
What's special about gold is that there's a finite amount of it,
Yeah.
and also it's like a very resistant metal.
Right.
So, you know, when gold was lost at the bottom of the oceans, people go out on expeditions
Yeah,
and they
looking
still
for the gold.
find it and
Yeah.
it's still intact,
Yeah.
right? So that's one of the special properties of gold as a metal, is that not only is it finite, but it's also like almost like, you know, eternal, right?
Right. And it looks pretty.
It's a bit like
It's
the
good.
James Bond like movie, Diamonds Are Forever, you know?
Yeah.
So that's like what's special about gold, except
Yeah.
that like, you know, well, anyway, we're not going to get into diamonds. But the problem that people have with this is that really now there's not that much difference between this note and toilet paper, right? Except that it's a
yeah.
bit prettier, but I could literally like, I can't exchange this
Well,
for gold.
But for the time being, it still represents exchange, a form of exchange and monetary value.
The only like
only reason
the
it
only
does-
valuable aspect of this is the psychological value. Like you see this and you think, oh, I can buy some stuff with this, right?
Right, and it's also tied to the banking system, and we can use that at the moment.
Yeah,
regulatory
but who
ways.
makes this?
Yeah, the banks make it, and the private banks and the Federal Reserve.
The central banks, right?
Yeah,
So this specifically is made by the European Central Bank.
right.
And who owns the European Central Bank? Do you know who owns it?
No. Who owns the central bank?
The European Central Bank is owned by its member banks. So the banks of all the countries of the European Union.
Yeah.
And do you know who owns those?
Hmm.
Because they're not owned by the state.
Okay.
Not, maybe some of them are, but I know that
Private banks.
in the case of France, let me tell you the story of France. In 1972,
Yeah.
there was this guy called Pompidou, I think he was like the French president. He'd been an employee of Rothschild Bank,
Yeah.
right? A director of Rothschild Bank for a number of years, got elected as French president, and guess what he decided to do? He decided to make the French central bank, which issued the French currency, private. And guess who owns the French central bank?
He does.
Nope,
No.
the Rothschild family do.
Okay.
So if that's not a conflict of interest,
Yeah.
to have someone who
Right.
was like
Yeah.
a director of Rothschild Bank
Yeah.
sign into law a treaty that basically means that like the people who are going to be responsible for printing the money
So
are going to be
Yeah.
a private entity
Yeah.
that's owned by your previous employer. I don't know what is, right?
Yeah, for sure.
And here's the other problem that I have with these private central banks. If I'm the state, I have a source of revenue, which is you. You pay me taxes, right?
Yeah.
So, in finance, they call the risk-free rate the rate at which states can borrow money. Why?
Yeah.
Because you always know that the state is going to be good for the money. Why? Because you're alive, right?
Yeah.
That's it.
Yeah.
So, right now, what this private central bank in France has managed to achieve is the creation of interest on debt that fundamentally is fake because it's private debt.
Right.
For me, it's fake debt
Yeah.
because the very concept of private state debt should not exist. State debt should be public. And the reason why it should be public is because the state is able to create currency to pay debts, because it's going to get that income for sure from taxpayers.
Right.
So why use a central bank, a private central bank? Well, you know, the argument at the time was that, you know, you can't count on the state because they're corrupt and blah, 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 and then they'll print too much money and then the whole country will go down the drain. All right, fair enough. But here's the problem with private central banks. Today, the French pay $42 billion on interests only. Interest only on that debt. And that is equivalent to the entire amount of taxes that they pay on their salary. For like this, the entire French population, you take the entire French population, you look at how much taxes they pay on their salary, it's equal to the interest on that outrageous debt, right?
Right.
So that is equivalent to enslaving the entire city of Marseille.
So, okay,
right.
So let's get back to then the value of this. So the value of the actual note itself is almost nothing, because it's not the original. So this was originally a form of trade between gold, and you would get 1 piece of gold or 50 pieces of gold if you gave this. So now you're saying what you had told me earlier on is that was then depegged from the gold.
From gold, yeah.
And
but
then,
worse than that. So we were talking about the fact that this money is printed by a private institution.
Yeah.
But let's just say, for argument's sake, that I'm the private institution.
Right.
Imagine that I've got the right to print money.
Yeah. So
I can print as much of it as I want.
Yeah.
Who am I accountable to? Well, that's a good question, because the Federal Reserve that's in the United States that prints this money, do you know that they haven't been audited for like 30 or 40 years?
Right. So ultimately, this is not the way forward. So ultimately, this
is a disgrace. This is an absolute con.
Yeah.
It's a total con.
Yeah.
Like, do you realise how big a con this is?
Yeah. I do.
That it's disgusting.
So this is why we then the cryptocurrency.
Cryptocurrency is basically
much more.
It's protest. It's basically like initially, like the guys who got involved in this, like me, right?
Yeah.
They knew that they were getting screwed, right?
Yeah.
They knew it, right?
Yeah.
And they were like, do you know what? If you want to do that, fine. But I've got a choice, and I'm just not going to play with you, right?
Right.
I'm not going to be a part of your system. You go run your con with other people who basically don't understand the con that you're running, right? And I'm going to go and I'm going to protect myself against this thing, because what you're building there is a house of cards. It's inherently unstable. It's hugely problematic, right? And I don't trust you, right? And this is basically like the original guys. They weren't so much interested in money. They were just like interested in, like, first of all, they were protesters. They were like revolutionaries, right? You know, and why? Because this has gone totally out of hand, right? But now, with the benefit of hindsight, I look at this and I say, actually, this is not such a bad system, right? Why? Because if I've got that 50 euros in the bank, I know that it's depreciating in value. So if I don't invest it, or if I don't spend it,
then you're aware that it will depreciate in value.
Yeah.
So
but what if I've got savings? Like, what if I've got more money that I need to spend? I need to get something for my savings.
Yes, it's not ideal. It's not.
And because they've totally like messed up the world economy, I no longer get any interest for my savings.
Right.
So savers are getting punished, right?
Do they not get interest? I think some
No,
people. A lot of people
it's even worse than that. It's so screwed up, the system, that you get negative interests.
Yeah.
So if you've got money in a bank
Right.
in Switzerland or in Germany,
Yeah.
the bank actually has to charge you for the money that you actually have in the bank. Can you believe that?
Wow.
I mean, this is crazy.
Yeah. No, I know.
So yeah. So I don't know that cryptocurrencies are a better system. You know, there's a big problem with this. You know, this basically, the fact that you can kind of like print as much money as you want, basically enables you to guarantee your population a degree of stability.
Yeah.
Right. The problem with cryptocurrencies, with Bitcoin, for instance, is that it's not egalitarian. So, you know, this cryptocurrency movement started as a protest against those central banking thieves, right?
Right.
And you know, Now, so the central banking thieves were like the aristocracy, right? And now there's like a new aristocracy, which is the guys who got in early on the cryptocurrencies.
Right. So it all there's good and bad in both the systems. So anywhere that you'll find a system where there's money and you can make money and profit, you'll find people who are greedy and who misuse it and take advantage of the system.
Yeah.
The overall theme, though, I think of cryptocurrency, the positive thing I see in it is that it's a step forward from the system we had. So in my opinion, any growth or movement from a system which ultimately wasn't seen to be working in some form would be a positive step forward, an evolution of terms. And so they can find different methods of improving it and blah blah blah. But it's ultimately, the way in which I see it and the way in which maybe other people see it is it's a move forward from something which represented like difficulty, or there was not growth, there was non-growth in it, and there was collapsing in some form, you know, and being misused. So hopefully in this new system of cryptocurrency, there'll be a means of being beneficial to society and giving back instead of like the oligarchy of, you know, just maybe investing in one group of
I hope
people.
so. I really hope so.
It'll be more egalitarian, you know, eventually, you know, and spread between the people.
One of the exciting things about it is that basically the most profitable business in the world is central banking, right? Because, well, I don't need to say because why. And, you know, the privatization of, or the kind of like, what you're talking about really is making central banking available to the public.
Right, yeah, that's what's happening, isn't it? Basically, yeah. It's
So,
cool.
so that's pretty cool if you get involved in it early.
Yeah, yeah, and if you do, well, hopefully there'll be systems. I mean, you know, this is the thing. It's the kind of the greed aspect. You know, no one's really in favour of that, and that people do better than other people. There's that idea of the Steam system that we discussed earlier. You know, that people get money for posting and things like that, and it gives back to the people instead of the money going out to marketing. It's giving back to the people. There's that hope in that. I'm
just smiling because I'm thinking about this ICO that we were talking about this morning.
Yeah, no, we were going to mention the ICO, but we're going to hold on that one.
Alright.
But yeah, no.
Yeah,
there's different. Let's just say there's different ways in which people fund ICOs and different ways in which they fund new cryptocurrencies, and there's very interesting ones out there. Perhaps if you get in touch with Alex, he can explain more about that. But
no, I will not.
okay, there you go.
I looked into it. I'm not investing in that.
Yeah, so there's very interesting systems out there.
It's a good idea.
It's really shallow that I can't actually talk about that, man. But I've become one of the tools.
Yeah,
and I'm not at all.
Because we are fundamentally putting this video on a platform that is not censorship resistant.
Yeah.
And as a result, you actually have to worry about what you say, and you also have to worry about like your audience and whatnot. Yeah.
Anyway, so eventually, maybe that won't be the case. So that's it. We did like a bit of a talk on cryptocurrency. Yeah. And I really thank you for your time, man.
It's
Really
been
helpful,
good.
dude, and giving me some. We've done this for 3 days now, having like conversations on this, and I've really learnt a lot. You should become a teacher. You're very good. So anyway, thank you very much, Alex, and check out all the links and stuff to Alex's article below. And yeah, that's great.
All right, thanks.
Okay. Let's hope to fuck. I have this fear that it wasn't recording. No, it was recording.
Oh, no, it was because there's a red light, yeah.